Hello everyone, my name is Dr. Deepika Tapadia. Today I will be discussing about annual report, a study of annual report. Annual report. An annual report is a comprehensive report detailing the company's activity throughout the preceding year. Its purpose is to provide users such as shareholders or potential investors with information about the company's operation and financial performance. The report basically contains the performance highlights, a letter from the CEO, financial information, objective and goal of the future years. There are many users of annual reports, which includes shareholders, potential investors, employees, customers. Annual report basically provides a significant amount of information for its readers who will be able to get a good overview of the company overall performance in the preceding year. It is important to note that many annual reports are not traditional report with large amount of text. Many companies often incorporate a lot of graphic and images, resulting in visually appealing documents. Generally, annual reports are mostly prepared by the company. In case of other business entity, partnership firm, proprietorship concern, there would not be any separate annual report. These are basically sent to shareholders and also submitted to various users such as bankers, investors, government authority, etc. It covers the financial year period. What are the basic details which the annual report of the company contains? It basically includes summary of financial highlights, narrative, text, graphic, image related to the operation, financial performance, market analysis, etc. Management discussion and analysis, director report showing various reporting compliance under Company Act, auditor's report, financial statement which covers the balance sheet, profit and loss and trading account, cash flow statement, explanatory note related to the account, etc. So these are the things which the annual report incorporates. Next, the structure of annual report undoubtedly will vary according to each company, but most annual report will generally contain the following: a letter from the president or CEO, performance highlight from preceding year, financial statement, and performance and outlook for future year. These basically annual report contain these. A letter from the CEO. Letter from the CEO is addressed to shareholders and provide a summary of the company performance in the previous year. CEO typically spend lot of time on their letter to highlight the company achievement as its performance is relatively to the industry it operates in. The letter would likely mention the information of interest to shareholders since they are the primary reader of the reporter. Next, the performance highlight. Annual report usually dedicate a section to highlight some of the company's key achievement such as special initiative, goal reach, award received by the company or its employee. The main goal of the section is to assure that shareholders are satisfied with their investment in the company and persuade potential investor to do the same. Next, financial statement. Financial statements are the key component of annual report and provide its users with quantitative data regarding specific aspect of its financial performance in previous financial year. Annual report typically includes financial statement such as balance sheet, income statement and cash flow statement. In addition, there will be often graph and chart included, helping the breakdown of the financial to make it more readable, more easy. Next, annual report typically include information regarding its future performance in order to provide shareholders with information on the company's future goal and objective. Investors are able to get thorough understanding of the company's current situation, current position in its respective industry, and the company's plan for future growth. The report also includes information regarding the company's strategy and how it plans to implement that strategy in the coming years. Next, while hard copy of annual report are still common, electronic version are increasingly very popular, becoming very popular, and can be found on the website of many companies. They, along with the hard copy, they come up with the electronic version, the soft copy of the annual report, and the annual report soft copy is usually it is there in the website of the company. Electronic version allow the reporter to be made accessible to the large audience in PDF or other format. Increasingly common are interactive online report which allow user to virtually flip through the report and expand graphic among other things. Next, some statement useful for analysis. There are some statement which is useful for analysis of the report. What do you mean by basically analysis? Analysis is establishing the relationship with each other in such a way that conclusion can be drawn with the help of analysis. So annual report needs to be analyzed. There are some ways. Financial statement analysis. It involves gaining an understanding of an organizational financial situation by reviewing its financial report. Also, it involves interpretation of financial data. Result of analysis can be used to make investment and lending decision. Understand and diagnose the financial information with a view to judge profitability and financial soundness of the company. These are some of the objective of the analysis. It makes format about the forecast about the future aspect of the company, assess the operational efficiency and managerial efficiency and effectiveness. It helps in assessing the solvency position of the firm. It helps in decision making and control, and analysis helps in comparison. Next, who are the users of annual report who require the annual report? What is need? They are having the need of annual report. The main external users are number one, investors. Investors basically analyze whether the company is they want to know whether the company is earning sufficient profit or not, and its projection for the future. What is the future trend and what is the future growth potential of the company, so as to decide for further investment. If the company's growth potential and profitability is good, the investor can plan for future more investment. Otherwise, they will sell the shares. Lenders, whether the company is capable of repaying the loan if granted. If already granted, how effectively these are being used. So lenders, they want to know how the company is using that amount which is given to the company. Supplier, whether the company is a sound company, whether any credit can be offered to them in future. If the company is a sound company, then the supplier can supply the raw material in credit to the company because their money is safe. But on the other hand, if the company is not sound, then the creditor or the supplier will not supply the raw material in credit. Next user is government, whether the company is regular in paying its taxes. There may be any default, so the government wants to know about the various facts and figures of the company so that they can see whether the company is capable of paying the tax or they might be a defaulter. Board of Director, what are the present source available? What is the status of present loan? Are they paid regularly as per the schedule? These are the information the Board of Director can get with the help of These are the information the director can get with the help of annual report. The present source available, status of the present loan, the loan which has been taken by the company are paid regularly or not, what is the profitability trend of the company, based on actual, what is the future projection, whether it is better to expand the company or buy new asset, what are the present market operation and future plan of the company, whether it is better to buy new land or property or lease them, whether the company can raise additional loan, if so how much loan. So these are the information, these are the point which the board of director can get by knowing, by reading the annual report. Next, some of the technique to analyze the financial statement. So basically we have horizontal analysis, trend analysis, vertical analysis, that is common size analysis, and ratio analysis. First is horizontal analysis or trend analysis. Horizontal analysis, it is also known as trend analysis. It looks at trend over time on various financial statement line item. A business will look at one period, usually a year, and compare it with the another period. For example, a business may compare sales from their current year to sales from the previous year. A comparison can be done. It is known as horizontal analysis. Next is vertical analysis. Vertical analysis is a percentage analysis of financial statement. Each line item listed in the financial statement is listed as a percentage of another line item. Vertical analysis makes it easier to compare the financial statement of the company with the other and across the industry. Next is ratio analysis. Ratio analysis is a vital tool used for the financial statement analysis or analyzing the annual report. It is based on the rule that a single accounting figure by itself may not communicate any meaningful information, but when expressed as relative to some other figure, it may be definitely provide some significant information. Ratio analysis is comparison of different number from the balance sheet, income statement, cash flow statement against the figure of previous year. Previous year is compared with the current year. The previous year of another company, industry, or even the economy in general for the purpose of financial analysis. Next, the importance of ratio analysis. The importance of ratio analysis lies in the fact that it presents fact on the comparative basis and enable drawing of inference regarding the performance of the company. It is relevant in assessing the performance of the company in respect of the following aspect. Liquidity position, how quickly converted to money. Long-term solvency, that is a long-term condition. Operational efficiency, how effectively funds are used. Overall profitability is low or high. Inter-firm comparison. First is liquidity position or liquidity ratio. Liquidity ratio are measurement used to examine the ability of the organization to pay off its short-term obligation for within 1 year. These are used by the prospective director and lender to decide whether to extend credit or debt respectively to the company or not. Higher the ratio, the better is the ability of the company to pay off its obligation on time. Solvency ratio. Solvency ratio shows the company's ability to make payment and pay off its long-term obligation to creditors, bondholders, and bank. In other words, solvency ratio identifies going concern issue and firm's ability to pay its bill in long term. These are also known as leverage ratio. These are used by availing long-term loan from bank or financial institution. So these are some of the analysis tool for analyzing the annual report. Annual report is very much important for the company and for the external users like shareholders, investors, lender, bank, government. It is a very important tool, very important report which the company needs to prepare, and it is also formed in an electronic form in a soft copy, and it is displayed in the company's website. Thank you so much.